Welcome, everybody. I'm going to probably just start right on time. And then we can kick it off. Welcome, everybody. We'll probably...
All right, we already have some questions in the Q&A.
So Larry says, I got stopped out of BYND. Just put your buy stop above today's high, Larry, on BYND. I'm still long. I still think it's going to take off. It just may take a little bit more time. All right, so I'm going to get started right on time here. Let me just share my screen. So welcome to the third of the four-day live trade execution webinar series, subtitled How to Capitalize on Monster Moves and Also Avoid the Market Traps. My name, again, is Mark Shawson, the Pattern Trader. Before we get started, I'm just going to give you guys a heads up. I have a family commitment at 6 o'clock tonight, so I'm going to be leaving a hair before 6 o'clock. So we're going to keep a pretty tight schedule. I'll try and get through everything. We should be able to, cover a lot, but I just want to kind of give you a quick heads up. Before I kind of get into it, just want to show you, yesterday I sent out an email. Kevin already kind of said thank you for that. So every day I send out emails to those on my elite program. You should have seen a video about that. Dwight, maybe we'll play that video tomorrow, or we can play it again.
Yeah, we can play it again today, right after you leave.
Play it again, or we'll play the elite. So if you're interested in the elite, if you're interested in getting my emails, this is what it looks like. Where, first off, this is
Mark. Is it the elite or the 200K?
You're right. It is the 200K. I'm sorry. Yes, thank you for reminding me. This is our 200,000, how to get to $200,000 program. And so you're right, Kevin. Thank you for. So again, what I try and do with the Pattern Trader is just inform, educate. This is not a signal service. This is not a money management. I don't tell you what to do. I kind of show you what I'm looking at and give you, my ideas. And I trade everything that I send out. So, first off, I'm an educator, but I'm a trader, number one. So you can see this was sent out yesterday, Tuesday, around just after our webinar. I sized up the market. So I'm always get this answer, do I trade the news? And I think that, that's a good question. And the answer is always no. I trade based exclusively on price patterns and price action. Now, I don't know if you caught it or not, but today we had a very important Fed meeting. Every couple of Wednesdays, the Fed meets and gives its kind of announcement. Jerome Powell kind of gives his prognostications on the future direction of interest rates, and interest rates affect everything. They affect stock pricing, affect FX pricing, affect the dollar. And so these are, and especially as we get later and later into the cycle where inflation, is there massive inflation? Is the massive inflation we're seeing transitory or more, deep rooted in the economy? And there's huge amounts of discussions and argument. And so, this kind of announcement today, this kind of report was, going to be very impactful. The Dow Jones fell 400 points, after Powell started speaking. So these things are very impactful, but I don't trade those. I don't try and anticipate what Powell's going to say. To my mind, the market's already telling me that. And, perhaps I should, even before I show you yesterday, take you back to even Sunday. So, I had no obviously clue on, what Powell was going to say today on Sunday. But these were my judgments and calls on my email on Sunday. So this was Sunday, a few days ago. I said, Basically, dollar appears to have caught a significant tailwind and is in a major support zone. Path of least resistance appears higher. Today, the dollar soared higher. Despite what Powell said, he was very dovish. Dollar should have sunk and went higher. Then I talked about pound New Zealand hovering around the 198 level, and I said I think it goes 1,000 pips higher from where it was on Sunday, and we're already a couple hundred pips ahead of that. And then I also said the recent upward momentum in gold appears to have stalled and now feels like we could incur a backslide in prices, at least in the short run, in the yellow metal. And really what I'm trying to convey here is that I was looking exclusively over the weekend at all of the patterns that I talk about. So I said, I'm long pound New Zealand. I want to short New Zealand dollar Canadian. I want to go short gold. I want to go long the stock of BYND. You can see here, I said, that the dollar's caught a bounce, looks like it's going to go higher. NASDAQ looks like it's going to go higher. And there I said, gold looks like it's stalled and the next move looks lower. And we've had a massive move lower in gold. I spoke about the New Zealand dollar Canadian going lower, Beyond Meat going higher, and gold going lower. So I don't always know. I kind of look at the setup and then I layer it with an execution strategy. So, when I sent this out, I can't really see the prices on this thing. Gold was probably trading around 1880. And I said, just put a sell stop at 1861. So I require the market to confirm what I'm looking at. And then I had a stop loss behind it and a take profit. And I said, break below the recent inside week bar could result in a break of prices to $1,800 or lower. And today we're trading about 1830, down about $50 on the action. I also said, I like a coil that's going on in Tesla. But the point being, so you can see I had two open pound New Zealand pairs, long just hibernating here. It's up again today. It'll be up again tomorrow. And so my point is, I have no clue about, what Powell's going to say. I don't really care. I just look at what the market's telling me. And this is what I try and get across all the time. I only look at price information. I don't trade the news. I don't, worry about what the Fed's going to do, what he's not going to do. The market's already telling me. So this was my email yesterday, where it was in the New Zealand dollar versus US dollar. I said, put a sell stop at 70.97. I said, we're forming a double top and a rounding top. Penetration below the low of the key reversal bar could be a catalyst for lower prices. And then I even said, tomorrow the Federal Reserve will release the minutes of its latest meeting on interest rates. There's likely to be a lot of volatility, blah, blah, blah. And there you have it. So this is what happened today in the New Zealand dollar and gold. New Zealand dollar versus US dollar. So you can see that we plummeted. Big shock, right? I sent out an email yesterday to short this thing, and then it caves on the announcement, after the Federal Reserve minutes are released. Sorry, I don't know why I'm having trouble, but let me just break this out a little bit. So to me, a picture is worth 1,000 words. And this is all I look at. This is what I call a clean or naked chart, because there are no indicators on here. You notice there's no volume. There's no moving averages. There's no Bollinger Bands. There's nothing on this chart but a clean picture of price and time. And so when I start looking at the picture, I start looking within the price action to see if, if I can discern, what's going on here. So this looks very sideways, but, it looks like this upward momentum stalled out a couple of weeks ago. You started seeing the shape of these bearish price patterns. So you saw that double top right there. And then you see another double top here. And then, more looks like a rounding top. So it's really like almost a cup and handle. There's, several things that you could, I'd say this is a rounding top and this is a double top, but whatever you see, this whole thing looks like it's stalling out, that the upward momentum has stalled out. And so, we don't always know these things. I'm pretty aggressive. I get on these patterns, before they're completely formed. And I use a combination of, a look of a pattern, and then I wait for a certain day where I can set up my trade and understand the risk reward dimension of that trade. So you can see right here yesterday. So in my email, I talked about this concept of a key reversal, where yesterday you can see it made a new high, and by the end of the day, it closed on the low. Now, here's the interesting part, is that I layer my analysis with a strategy that requires me to confirm, or requires the market to confirm what I'm looking at. So I said put a sell stop right here at 70.97. And so here is the real interesting part. You can see that all yesterday or last night, the thing went much higher. So now if you were staring in front of your screen, you're trying to get 7 pips or 15 pips, you're trying to figure out where this is going, you're trying to get it at the right moment, and you spend 6 hours, banging back and forth. You've got to stopped out a million times. I just had my pending order sitting here. And if, the thing just kept going higher, then my resting order doesn't get triggered. But what happened was market went higher and then put me in at the time and price that the market was ready to go. And now it's just effortless. I didn't have to do anything but take my email and put in an order on my platform, which took me all of about 4 seconds. Sorry, that wasn't the email. So here was the email. Put a sell stop at 70.97. And you can see that prices went higher for most of the daily session until they crashed. And so basically, this is what I do. I look at the analysis. It's a 4-step plan. I look at, if there's a direction, if there's a pattern, I drill it down to a key reversal bar, and then I couple it with an execution that requires me to put a sell stop under the low of this key reversal bar. I said penetration below the low. So I required, the market to go below the low of yesterday's key reversal bar to see if that would be a catalyst. And so that's exactly what happened. I just put my sell stop right there, and you can see now I'm in the market. Now, where the market goes, we don't know. I'm off to the races. I've got the market by the cojones, and now we'll see where it goes. I said put a stop loss behind it above the high at 70.71, and people say, well, now where do you move your stop loss? So I don't just reactively move the stop loss now to break even, because tomorrow you just could have a random thing here and then it goes back down. So for now, I'm just going to leave the stop loss for where it is, and I'm just going to check this out. And then I had a take profit somewhere down here, and my take profits are usually pretty arbitrary. What I want to do is I want to see how prices react to my signal. So once, my signal gets triggered right here, then I want to see, does it look like I'm on the right direction of things? And you can see by the way this thing kind of came out of here and closed on the low, it looks like I could have, a nice trade, by the, so you can see the next support is about 150 pips lower. We'll see how this goes. And I'll manage my trade, as the trade develops. So I have my stop loss. I'm in the trade. I've got, a few pips in the basket already. And so you can see that this is an effortless trade. I just put my sell stop here and let the market do all of the work for me. I wasn't up all night looking at a 5-minute chart, going short here, maybe getting stopped out right at the top before it gets, crashes. I just had the pending order there, and now I'm put in the trade, and now I'm looking to pick up a couple hundred pips as this thing makes its way lower. The same thing for gold, where you saw in my email on Sunday, I said put a pending order below the weekly low around 1861. And again, didn't know what the Fed was going to do, didn't really care. The market puts you in, the market takes you out. And so let me find gold here real quick. Ticker symbol is XAUUSD. It's the ticker symbol for spot gold. And lo and behold, you had a massive crash in gold. So, gold prices are crashing. So I was looking at the weekly chart on Sunday when I sent out my email, and I've been saying to our members, I don't really have a good case, but I just felt like, I didn't want to chase this gold rally. So I made, some money on the upside, and when it was hanging around these, $1,900 level, I just was saying, I just get a feeling that gold's gonna sink here. Didn't, have any evidence. The only evidence I had was in the form of these guys right there. So sometimes the markets, there are certain areas that are real barriers that stand in the way. And it could be 3 months prior, or it could be 5 months prior, or 5 years prior. So I look at a lot of historical data, the patterns that, when markets are kind of in, a transient zone where you're not quite sure what's going on. So, when I saw this double bottom, I thought we would have a liftoff. I didn't know how far we would go. So I took a piece of that liftoff, and then I kind of said, I'm just going to leave it alone for now. And then we saw where the market made a new high a couple of weeks ago, and then it stalled out. You can see that last week, this is a weekly bar. So this is a weekly chart. So each one of these bars takes 1 week to form. And you can see last week, the high and low of that week sat within the high and low of the previous week. And what that said to me was that this rally was stalling out. Now, can't be 100% sure, but this is why, I layer it with an execution plan that requires the market to confirm. So I said, let's just check it out by putting a sell stop right under that low. And you can see the market basically opened right around last week's, unchanged area, which was around the 1880 area. And then at some point, a couple of days ago, I got triggered into this thing, and now I'm just, buried deep in profit. I didn't have to do a thing. I didn't have to stare at a screen. I didn't have to watch some magic Bollinger Band, kind of thing. I just put my sell stop in, and, here we are. So I just let the market, by virtue of the patterns and the price action, tell me what's going on. And so in a combination of, my emails, this is kind of what this is what my moves look like today. So I've been pretty aggressive, buying call options in the stock of BYND. I'm making a few shekels, but I've got a heavy risk here. I put in 38,000 on this and 24,000. And if this thing goes, and they expire on Friday. So any backslide, and I could lose, 60, 70 grand very, very quickly. And then I've also got 10,000 shares of BYND and slightly, in the red there. And then I also started nibbling at the long side of Tesla. I get a sneaking feeling that this thing is going to go higher. So I'm down so far about $8,000 on today in my stock trades, but more than making it up in my FX trades. So I've been saying forever that I think the pound New Zealand dollar is going higher. I also like dollar yen going higher. And here's my gold, here's the New Zealand dollar Canadian. I'm short, losing a little bit on that trade. And then this is, big move on gold, where I got short around 1865, making almost 6 figures on that trade. And then here's my trade from yesterday, New Zealand dollar, US dollar. So and I have all of the emails that were sent out. Here's the emails for the pound New Zealand, so, I'm not just showing you something, and backfilling it, finding some demo account and, backfilling numbers. These are historical emails that, go back 2 weeks, where I talked about the pound versus New Zealand dollar trading pair. Here's pound New Zealand today. I said that this thing is just going to keep making new highs above 198. This thing is starting to, look like it's going to really catch some thrusters now. And the thing is, I've been saying this for many, many of these webinars. So it's happening. It's happening right now. But I've been saying this for a couple of months, and so this one has taken its time. Not quite sure why it's kind of sizing this way. Let me just. I don't know what I did, but anyhow, probably accentuates what we're looking at. So this is the pound versus New Zealand dollar. I talked about it, every day this week, where to me, there was a lot of chaos in this pair. You had, huge decline, a massive decline. And then you've had, a lot of just, chaotic price action. But to me, I kind of stand back, try and see the forest for the trees. And, this was my guiding pattern, this W double bottom. So now, with the word bottom in it, this is my governing price pattern. So notwithstanding all the chaos that has ensued since this bottomed, I kind of kept on telling our members, despite these crashes, just trust the pattern, trust the double bottom, trust these key reversals, trust this triple bottom here. So the market shows you these patterns and price action. So it's a combination of the aggressive bottoming pattern here, this double bottom, and then we can see these key reversals where it made a new low, close on the high, made a new low, close on the high, made a new low. So you can see at very important areas, the market, these things actually point in the direction it wants to go. It just takes sometimes a little while for the market to, go in the direction as indicated. But all this has been a stairway to heaven, like that Led Zeppelin song. Every time it makes a key reversal, it makes a new high. And now today, we've broken out above these resistance highs and actually closed above this 198 area. So to my mind, there's just, blue sky above for this thing. I think that, it's easily going to go 1,000 pips higher from here. So we can just look at on the weekly. I don't know why it got so distorted there. So what I'd like to do in this session is actually, you've heard me rant for a couple of days now, is I want to just see, if you guys are contextualizing this information. You should have gotten an information pamphlet from me, talking about patterns and, my layer plan. If you bought my book, I want to just see how you guys are integrating that. So what I would like some feedback from you is I would like to, so let me just finish this up real quick. This is the weekly chart. So you can see the double bottom we saw on the daily. We also see on the weekly. And then you also see this inverted head and shoulders, which looks like an upside down man or woman's head and shoulders. And you can see this is the neckline that we've just pierced above. And now there's just blue sky above here for this thing to start roaming in. Where it goes, nobody knows. And so I don't know the time frame. I don't know where it's going to go. I've got my positions on. I will probably keep adding to my positions. And, I'm not looking to get out anytime soon, even if this thing goes up 500 pips from here. So what I would like to do is ask you guys, it doesn't matter if it's a stock chart, Devondra, or Forex, or what have you. I'd like you to tell me what you're looking at, and if you're looking to go long or short, and why, what the pattern is and why you are. So, I would like to get some feedback from you guys, and then we can all analyze it. So Russell says the bar chart is the simplest thing ever. I can't believe I was using candlesticks. You can see this the swings with ease. So this is what Russell was saying, is that, I'm always asked the question, and I'm just an old guy. I've been doing the same thing like an old dog, doesn't learn new tricks. But to me, when I see the bars, and I often talk about the quality of the bars. So sometimes when I see a combination where I see what I think is a pattern. Now, this is a double bottom. Now, most people would say, well, you should wait till the double bottom's confirmed. Believe me, I am trading this double bottom from the inception. Once I see that, you can see that here, it made a new low and closed at the high. And at the same area, it made a new low and closed at the high. It doesn't matter that's red. You can see it closed at the high part of that daily bar, or in this case, it was a weekly bar. So I am looking to trade this thing from the get-go. I'm just going to put my buy stop right there, and that's what you're looking at. So to me, these bars point in the direction they want to go. And, I did a number of what I call counter trend trades. So to my mind, the main trend has been stealthily higher. But you can see that this thing is, not shy about making some down moves either. So when it kind of broke out of here, I was kind of unsure, that reversal. I didn't trade it right there. But when it started to return back into the neighborhood of this triangle here, then I started getting short. And then I said to our members, get short right there. And we took a nice 500-600 pip move on the downside. So sometimes, you know, these bars also tell you by closing on the low that there's a nice move to be had, you know, on the other side. Now, I don't just trade these reversals in a vacuum. I look at in context with resistance areas and trends and what have you. But I think these, you know, if you look at these bars, made a new high and then closed right on the low. And you can see the size of that bar, you know, that stopped this thing dead in its tracks. And for a while, you know, put this thing in reverse. And so this is why you kind of have to have a, you know, better understanding of, you know, what you're looking at. And so to me, this is a bull trend. So even though this thing came down, you know, a mile a minute, I was always looking for the turn higher. And we've, like a, you know, tanker out in the ocean, we've been making this U-turn. And now we're about to, you know, complete that. And then, you know, you're going to see it up here. I think this thing will go make new highs at some point above here. I don't think that this is going to be an exaggeration. All right, so let me see. Peter says, I went short on cable, which is the pound versus US dollar. The reasons were a double top on the weekly, 2 bearish weekly candles, went short an hour before the US Open. Also, the bottoming of the dollar helped me to be confident to short the cable. So cable, again, is, you know, slang in FX for pound versus US dollars. And so, you know, I pointed out, you know, on my dollar index chart over the week that the dollar looked like it was going to support. So if the dollar is going to support, it means everything against the dollar is, you know, going to go lower. So what Peter says that, okay, use the weekly chart. So this is the weekly chart. So you can see that this was the resistance area all the way here. So, you know, you can see by looking at the weekly chart, by peeling out and seeing, you know, several years, now you can see where different things come into mind. Where if you're looking at the 15-minute chart or the 4-hour chart, you have no clue, you know, why or where this turns. It just looks like a carnival ride. And so Peter was saying that he saw these reversal candles here, made a new high, closing the low. Same here. And you kind of had an inside weak bar here. And so all you have to do, you know, is prod this market, put a sell stop above here, below that weekly low, and then see where this thing goes. So you can see that this has been adhering to a long-term trend line that we're now looking like we're going to punch through. And so this could open up a, you know, a nice move lower. Although pound looks, you know, inherently strong, I think that, you know, I wouldn't be looking for too much more of a pullback beyond here. So, you know, your take profit objectives on this probably need to be a little, you know, a little shorter. I don't think that this is going to end up being a double top and the end of this market. I think that this is a transition point that, you know, we could see it down here before it pops back up. But, you know, right now, I think that was, you know, so Peter says my target is 137, which is right around here. Yeah, you may want to put that target maybe a little bit above these lows, but, you know, what have you. So Lawrence says, how much is a pip? I'll put up a calculator. A pip varies depending on the currency pair you're trading. So like Euro and Australian are $10 a pip or $1 per mini. And then the others vary. And I'll put up a, I'll just do that now, actually. So this is actually a very good resource. I shared this with you yesterday. This MyFX book, position size calculator. And you can also come here and you come to Forex calculators, and this is where you can get Pip calculator, margin, what have you. So to calculate a value of a pip, just put your trade size in here in lots, you know, 10,000 units, whatever it is. And this will tell you. So I'll put this pip calculator for Lauren and others in the chat box here. And those for you who weren't here yesterday, again, this is the position size calculator, and this will help you size the the size position you need for a given amount of risk. And I'll put this again in the chat box. So let me just see if there are any other people who said, I took a short on euro, US dollar. So Derek, when you say you took a short on, or, you know, if you go long, just tell me why. I want to know your thought process. Let's see.
Hey, Mark, Russell's saying for pound and Aussie, he's in long targeting 18.34.0.
So he's long pound Australian.
Yep.
Okay, but I really also like to understand why. So if you have something, so Oscar says, how do you suggest a beginner start learning your trading program? Well, Oscar, we have, you know, a book that I handed out yesterday. We have all kinds of videos. We have, you know, different programs. Tonight we'll play a video for you on how you can get started. So Dwight will play that video when we finish up. But thank you for that. So yes, I think pound versus Australian dollar for the same with pound versus New Zealand dollar. This is a stealth bull market. You can see that, you know, there was a double bottom all the way here. It's a little weaker than pound New Zealand, but for the same reasons, I like it, you know, higher. I think there's a lot of blue sky for this thing to start roaming into, and I think it'll head north. So Kayuta says dollar Swiss double bottom breaking resistance. So I don't know if you are saying that it's a buy or a sell, or there's a double bottom that's coming out of it. So it looks like there's an emerging double bottom down here. It hasn't, you know, broken resistance. This is the weekly. This is kind of a tough chart, dollar Swiss, just because it's so. So I don't really trade dollar Swiss until, you know, unless there's a real. So you can see it's been a very chaotic pair. Looks like we broke. So all of the dollar, you know, pairs are starting to grab a foothold because the dollar looks like it's, you know, it's getting some support. And the question, you know, long term, the dollar still looks weaker to me. But, you know, I expected that we would get a short-term trading bounce, especially versus New Zealand dollar and probably the euro. So we're at this area where there is support here. It's just, I don't really have a good feeling if this is, I don't really know if this is a double bottom. We'll certainly see. Or just kind of a trading thing where you're kind of just found some support and it's going to trade higher in here. I don't really have a good feeling about dollar Swiss just by virtue of, so let me kind of, whenever something looks ambivalent on one time frame, I like to look at on another. And so this is the monthly, and the more time you can, you know, introduce, you know, sometimes the clearer it becomes. So dollar Swiss is, you can see a very range bound pair. You know, it's, you know, it's basically been locked up in that trading range for a long time. So, you know, I kind of like to find things that move from one direction to another. And so the question is, you know, is this, you know, long-term double bottom? It's a funky looking double bottom. And here we've got another emerging looking, you know, support area. And so look, if we started, you know, taking out these areas, I would look at it, but this is just a funky pair. You know, it wouldn't be my favorite pair to trade a dollar. To me, the pair to keep an eye on, if you're looking at dollar trading, is the dollar yen. I sent out an email actually tonight on dollar yen, and we talked about it yesterday. I think by virtue of what dollar yen is not doing as well as what it is doing, you know, this thing looks like it could soar higher. So we've been trapped in this kind of sideways trading range. This is a monthly chart. And we talked about this yesterday, where it's been trapped within this long-term symmetrical triangle, and we're starting to break out. And sometimes you get these fake breakouts. Sorry, that was the wrong color. where, it creates a trap. And I was always kind of wondering if that was going to occur. But I think this thing is now starting to, picking a direction. So, we were coiling in this area. You can see that it actually broke out of the monthly coil bar. So we had an inside month bar last month. And the bigger the bars, I'm sorry, the bigger the duration of the bars, the more impactful the signal. So, I mean, we get signals on a 5-minute chart all the time, some breakout below a narrow range bar, breakout of a, head and shoulders or what have you. But on a 5-minute chart, how long does it last? But on a monthly chart, that starts signaling long-term consequences. So the fact that we broke above the monthly high and are, starting to break above multi-month highs suggests that this thing is about to launch, and that you guys need to get long the dollar yen. So this is the dollar pair to trade. Russell says, I'm looking for shorting New Zealand yen tomorrow around the 78. So Russell, I need to know why you're looking to short something or why you're looking to buy something. Let's see.
Hey, as it relates to the pound Australian, he was saying he's long because it has a big daily reversal bar engulfing candle.
Okay, so I don't really speak candlestick lingo. When I say it's probably the same thing. When you say engulfing and I say key reversal, it's probably the same thing. So this is the pound versus Australian. I think my charts have just gotten out of whack here. I did something and now they're just size different.
You probably want to hit full screen on the program itself.
What's
top
that?
right. You probably want to hit full screen on the program to the top right, right beside the X.
No, but I've kind of compressed these things at some point, and I don't know what I did, but it's now messed up the scaling. I don't know what is, and this is a relatively new addition, so I'm not very familiar. Not sure what is going on here. So the same thing as pound New Zealand is that there's, embedded double bottom in the pound Australian all the way down at the 174.5 area. And it's been guiding, despite all this back and forth between the 177.5 and 180, you can see all this thrashing around. This is the guiding pattern. So a couple of days ago, you did have a key reversal, and I don't understand why I can't right size this this bar. But yeah, so for the pound New Zealand, pound Australian, same thing as pound Australian, pound New Zealand. So this is the pound Australian. This is a weekly chart. And again, I referenced several years back where you see this double bottom, and actually it's a triple bottom, and you can actually call it a rectangle bottom, but whatever you want to call it, it's it's got the word bottom in it. So you can see it's a rectangle bottom, it's a triple bottom. And so this set the tone, for where this thing is going, long term. And so these pairs have been in kind of a stealth bull market. So from 160, we're trading at 183 now. 5 years later. So this has slowly been working its way higher. And so when you see something like this, it looks very scary and it looks like, well, this is, going to continue. And by the way, I called the top of this thing in the same way that I called the top of gold by observing this ascending broadening price pattern. So we looked at the ascending broadening on gold yesterday. This is an ascending broadening price pattern. So ascending broadening is where throughout the pattern it's going higher. It starts out life narrow and then widens or broadens out at the top. So within the ascending broadening price pattern, I saw this double top here. And then when it broke here, told our members that this thing's going to go a lot lower. And the nice thing about the ascending broadening pattern is that once it breaks, we know exactly where it's going to. It's going to revisit exactly where it started. And you can see right there, 196, I said this thing's going to 178, 175 to 178. It went to about 174. And gold did the same thing. And now gold has bounced off this low within the ascending broadening price pattern. We don't know if it's going to revisit it and then, do that. So, gold is in the midst of, doing this. But, when gold got to the top here, I said we were going to go to the bottom end of that ascending broadening price pattern. So that was what dictated that move lower. So that was then, and this is now. And so in the more recent time frame, just like pound versus New Zealand, you've got these double bottom, inverted head and shoulders, and you're not too far away from, breaking out above this resistance area about 185. And then there's going to be a lot of, fresh air to roam above there. So I think this has the same, attributes as pound New Zealand. So a lot of people saying pound New Zealand has inverted head and shoulders. Yes. Can praise. Yeah, I'll try that. So let's see. Russell says take profit at 77.40. So Peter says possible double top on the S&P weekly, SPX. So we just had a Fed meeting talking about interest rates. And here's the SPY. So, I've been looking at these things. I wanted to take a short on the Dow yesterday. It's hard to, this is also, so let me kind of go back to these charts because I think they're easier. So I'm also seeing this ascending broadening price pattern on these stock charts. Just a question of, how high does this thing go? But it does feel like we're going to retrace back to, so here's the resistance line. Here's this kind of support line. So you can see how we've got this ascending broadening, and it does feel like we're going to get at some point a pullback. But, maybe not. I mean, you still got this double bottom and, things are, this is, to me, they're, markets end. And when they end, they have a certain shape. And, the fact that this has kind of been making lower, higher lows, the path of least resistance still feels higher. I can't really see a shape or a price action that, to my mind, would kick off or initiate a huge move lower. But, maybe just the puncturing of this uptrend line, which you can see that we're, right here. So if we start to, crack underneath here, it could open up a move lower. But for right now, I don't know. It still feels pretty like the path of least resistance is higher. We may have to come all the way up here before we go there. So, I've been looking at these things. The Dow certainly is the weakest of them all. And I'm kicking myself that I didn't buy Dow puts yesterday when I wanted to. Because the Dow cracked today pretty good. Worse. So you can see, I was saying yesterday that the Dow looks like it was rounding up there, and you did have these key reversals, and you do have a shape now of what appears to be a rolling pattern in the Dow. And again, I, kind of, look at everything through a prism of a pattern. And then within the pattern, I start looking or trying to find, those bars that indicate that there's a way to set up a risk reward. So you can see all the way up here at the top end of this pattern. And, in February, I isolated the NASDAQ at the top of an ascending broadening like this, and I made 7 figures when the NASDAQ went, below the support end of the ascending broadening triangle in that time frame. So you can see that it kind of petered out there. And then we have this rounding top. And then within the rounding top, you had all of these reversals. Made a new high, closing the low, made a new high, closing. So, once it kind of cracked this neckline yesterday, it intimated that we were going to fall through here. So the Dow of all of them looks like the most vulnerable. But that could, turn, they could all, so you could see that they're all kind of sitting on this thing. So the Dow looks like we could definitely pull back here, which is about another 1,500 points or so. So we'll see how, that looks. Mohammed says, how far can you go in the chart before it's deciding to take it? Every trade is different, Mohammed. Sometimes I can see the shape, like New Zealand dollar, US dollar, I can see the shape, compressed, within, last couple of days. But, this goes all the way back to November. So, I peel out, I kind of look and see if there's a global, pattern. And then within the pattern, I can start seeing, I started saying, just yesterday, that I thought that this Dow looked like it was, rolling in here. So you can see that this is just pretty recent. This rounding top has just taken place over the last couple of days. So, it just depends. The more you can kind of broaden out and widen and see, get some perspective, and then, you drill it down. So I start wide and then I drill it down. So I say, is there a guiding pattern? Is there an uptrend? And then I drill it down to a set of bars that I can create a risk reward kind of trade around that. Brent says, what was the market news today? The Fed, kind of gave their guidance on interest rates, which is very, very important. And, Powell still sounds as dovish as he was. He's not letting out his foot off the pedal. He's still keeping things pretty low. And this is a trade that, I'm kind of getting very interested in. I started taking a nibble at the long side of Tesla today. For, what it is doing is also for what it's not doing. So I was looking at, Tesla along this, long-term trend line here. You can see it just keeps bouncing off here. And so more recently, we're kind of in this very coiled symmetrical triangle. So, there's a support area here at around the 550, and then you've kind of had these lower highs. And today you had a bit of a key reversal. I don't know if it's going to be enough to kind of launch this thing, but, we went lower. Despite the news, we closed on the high. So now, if you're, conservative, you might want to, wait and see how this thing, if it breaks out of the symmetrical triangle that way or that way. I started nibbling on the long side today, and I'll put a buy stop over today's high, which is around 609. And if it pokes through there tomorrow, then I'm going to, consolidate a long position in anticipation that we might, break to the upside. So this is in a long-term kind of triangle here. And so one way or another, when this thing breaks, we're going to get a move one way or another. I thought it was going to be lower, but now I'm starting to think, that it's going to, and again, it's not what I think, it's what I'm seeing. I'm just seeing this cadence of lower highs. So if a market, is going to sell off, then it's going to be doing the opposite. It's going to be making, lower highs and lower lows. Instead, it's making, higher lows. It's going, upward. So, but it's getting more and more boxed in. You can see that we've, for the last week or so, we've been coiling in this zone here. And these coils to me are just like a compression. They're a building of energy. And the more something coils and collects, you can see here, there was a whole collection here of energy. And when the energy broke, you can see there was a whole distribution to that, that side. So now this thing's going to break one way or another, and it's going to break hard once it comes out of this coil. So I kind of call this like the beach ball effect, where you push on a ball, put your hand on top of the ball, you push it underwater, you push it as far as you can, you let your hand off. What happens? It just uncorks. The energy just releases. And this is what I look at. I look at these areas of congestion, but I look at obviously in context with this broader. So what I do is I just put a boundary in order to understand prices. If you just look at prices like this, it becomes pretty random. So what I try and do is try and put some structure, try and put boundaries. Here's even a shorter term. There's a longer term symmetrical triangle and a shorter term. So by, the market kind of breaking one way or another out of these boundaries starts telling you certain things, starts giving you, an inclination of where the broader move is. And remember, I'm trying to take advantage of a bigger move one way or another, $50, $80, $100. I'm not trying to, snatch $3 out of an intraday trade. So Kevin says, Powell's up the river. Who cares what Powell's doing or not doing? I don't care what he says or doesn't say. I don't care what the consequences of what he says. I'm just going to get on one side of the market or the other based on what the market is going to, it doesn't matter. The news is, the price is the news. So that's kind of what I'm looking at. Any of you guys are looking at any other trades? Let me ask you, are you guys learning something from this? Is this sinking in? Does this make sense to you? Or does it still seem like it's Chinese, like it's pretty gibberish right now? Do you guys see that you could, make some money doing this? Do you think that, this is something that you could see utilizing in your trading? So Lynn says, this is very helpful. I'm seeing the patterns. Mohammed says, yes, absolutely. I don't see the full name, so I can't give credit. Oscar says, it's overwhelming, but small steps. Teddy says, this is good. So, look, journey starts with a single step. I've been doing this for a long, long time. So if you got it after 3 days, I'd be pretty pissed off because I've spent 40 years trying to figure this out. Shabir says, makes a lot of sense. Dusan says, makes sense. Kenneth says, I'm using this already. John says, yes, for Forex Defo. Not quite sure what that means. Shoba says, Mark, you've changed the way I look at charts. Amazing. Derek says, makes sense. So, all right. So I'm just looking for some feedback here. So let's see. There was a question about BYND. Sorry, these questions come in so much and then I lose the question. Ellie says, I have a question about BYND. Sorry, it keeps bouncing around, so I can't read it. It broke below 144 yesterday and recovered today. Should I close the long call option, increase it, or just leave it? So I'm still long. I showed you, that I've got probably way too big an exposure to BYND. I have 300 call options, which represent 30,000 shares, and then 10,000, shares. And so, and then I'm long in my other account too. So I just think I'm way too long on this. But I made a bunch of money on BYND 2 weeks ago, and I think it's setting up for, another move here. And it's just in a coiling congestion zone. Where's the BYND here? So I kind of talked about it earlier in the week where, I made just a monster trade a couple of weeks ago by buying the call options. And this was a function of, what it did as well as what it didn't do. So this is kind of a crazy chart. There's no real pattern or trend per se. The trend, has changed quite a lot. But for me, it was, what it it didn't do right here, or what it did do. So this was a long-term, support level. And, then the market came crashing through here. And this should have kicked off, a huge bear move by virtue of just the preceding price action. So once it broke here, this was my expectation, because you had, a lot of like giant bear patterns. You had the double top here, you had the double top here. This whole thing was really a double top sitting on this single, neckline. And so based on, everything I was looking at, and this is where, this stuff is different. So you can see this stuff in a textbook and say, well, okay, it's going to break this neckline, got to get short. And, for a time you were rewarded, but then, if the market starts telling you something different, you got to pay attention to the market, forget the textbooks. And so, when I started seeing that this thing was putting on a rounding bottom, and then it circled and, closed above this neckline again, all kinds of, warning signs. So it was like, at this point, there obviously wasn't really a pattern or a trend to say, well, this is going to go this way. But for me, just by virtue of instinct or what have you, and what I saw was a minimal risk to take a bet, I just viewed this whole thing as a trap. That once it snuck under here, and then it didn't go lower, all of these guys who shorted under this neckline are now trapped. And when you create these bear traps, then you get what I call a short squeeze, and you can get just these monster, very, very quick moves out of here. And so this, by virtue of all of these bear patterns, should have, already come through here, and certainly shouldn't have rallied, as far as it has. So it's starting to bust the implications of these prior patterns and taking on kind of a new life of its own. So now, kind of the new shape is an inverted or an upside down looking head and shoulders. And so, with kind of a squirrely upsloping neckline here. So certainly if it came back to, 160, I think that there's just a, big move that could be had in hand. So I've been long here. You can see that it's obviously just been coiling in here. It's not really going anywhere, but again, it's these coils. This is building or storing energy, and it's going to break out one way or another. I mean, it could break against me too. I've got a huge position, and tomorrow is going to be very consequential. So again, we have our friend, the inside day bar here. You can see that today's range sits within the range of yesterday. And so the way I would play this is, we don't really know, but I'm not going to look at a 5-minute chart and let the market do all the work. So I would simply put a buy stop above these highs around 152 or whatever. Put a buy stop there, put your sell stop there. That's your risk, and that could be your reward. So this is how I kind of look at, shapes and patterns, and use these different bars to set up a risk reward. And that's what it's about. It's just setting up a trade where you can justify the risk versus the reward. And to me, I'm always looking for, an outcome that's typically 3 times my risk. If you can do 2 times, that's great. But, if you do 1 to 1, if you're trying to, make $5 and you're risking $5, over time, you'll probably get eaten up. So, right in this juncture where I saw this little mini inside day bar, I put a buy stop. Actually, I started buying it at the market, right? It started levitating above there. And I bought the call options. And so just made 7 figures in that little move over 3 days. So now it's coiling again, and I'm hoping we're gonna take another trip. Although I look at the weekly chart and it may not do it this week. It's we may get to the top end of the range this week, and then probably uncoil next week. So you can see that week on week we're just kind of coiling in here, and then we'll see where we come. So I'm hoping that we kind of make a key reversal for the week, close up about the 150 to 155 area, close on the high, and then I would be looking to get set up for next week for another move higher. So Mustafa says, can you repeat the sell stop? So I would just put a sell stop under today's low, which was where's BYND? So today's high was 150.85. So you could probably put a buy stop at 151, and the low was 144.76. So you could use those parameters to set up a trade. Princess, do you have a group where you do trade? Yes, we do. We have a Friday group. We're going to tell you how to kind of get started in baby steps tonight. Prince, thank you for asking. Dwight will play you a video on how you can get started with one of our programs. And then if you like it, we could go from there. Ken says, how do you select the contracts in the money or out of the money? How far? It's a judgment. It's a feel. It's a kind of a just where you think this can go, how far it can go, what time frame it will go. So I've got the 147s and 150s, I think. So I bought the 148s today and the 158s. So I bought this when, Beyond was trading down. It was trading around 146.5. And so I didn't want to go too far out of the money because these go off the board on Friday. So if this thing closes, at 147.90 on Friday, I will lose all of this money. So even, if it, goes up from where I bought it. So I bought this 150 earlier in the week. I was making a whole bunch of money today and I didn't take it off the table because it went to 150. I was making about 20 grand at one point, and I didn't take it off just because I think that I'm hoping this, has another push in it, although it may just stall out this week and do, the push next week, in which case I could lose a lot of money and still be right. Kenneth says, I've been trading since 2013. I've taken hundreds of courses and read countless books. Mark's trading methodology feels like the truth. After these past few days, I've begun implementing this style and I've made a few bucks, enough that I'm going to continue with Mark. So Kenneth, that is fantastic. Tomorrow, I'm going to actually ask you to post a review, Kenneth. I mean, if you could just even cut and paste this in our review website, I would really appreciate it. But thank you for that endorsement. So Shahid, we went through gold. I'll go through gold only because I mentioned this ascending broadening price pattern of the pound versus Australian dollar. And to me, I made a ton of money in gold. When everybody was saying that it was a long, I was advising our members to, get out. And midway through this pattern, I said, get short. And I made it a boatload of money here. So here, just like we saw with pound versus Australian dollar, here's this long-term ascending broadening price pattern in gold. And so, when the volatility started to expand right here, you can see that these 3 weekly bars, the size of the bars from high to low, were bigger than anything that preceded it. And when I get 3 weekly bars of increased volatility, I just knee-jerk, just get out and say, look, I'm going to hand it over to the next guy. If you can make money, fine. And it turns out it stalled out there, put on a whole bunch of patterns right here, put on the symmetrical triangle right here that it broke out of. Then it put a double top right here. So it was like these reversals right there. That's what, within the cadence of this ascending. So right here is where I told our members, let's get short. I put on 2 positions, one at 1841, one at 1797, and I got out right here at about 1687 and made about 200K on that little move down there. So, now, where this thing goes, it's going to be interesting if we dance back here, if, this is the big buy signal or this is the sell signal. Now, for me, it's this is where, your emotions get a little bit, because if I didn't know it was gold, you'd say, well, the thing is, if this breaks, like I said with pound Australian, you kind of know if this thing breaks where it's going to go. And it's going to go all the way back here. So gold would break from 1800 to 1200. Hard to kind of fathom that in a world where everybody's saying gold's going to 3,000. So this is where I let the charts do the speaking. But for right now, I got short there. I've got a buy at around 1807. You can see we're already at 1811. This thing is crashing. So it's almost at my take profit. Over the weekend, I said the take profit was 1807. I didn't even actually have a take profit. I like to see where the markets kind of fall to. But this may just even hit the take profit. I don't know if it hit there already. The low, yeah, it did. It hit 1802 intraday. So I got into 1861 and out at 1807 on my email. So people would have made $56 on gold in 2 days. So
Mark, the seed is asking, what are your top favorite indicators?
Indicators? I don't use any indicators. That's the whole point of this thing. I don't use any indicators. I don't use any moving averages. I use only what you see on this chart, price and time. So there are, no volume. There are no, Bollinger Bands here. There's no MACD. There's no moving averages. There's nothing on this chart. This is what I look at. And I extract hundreds of thousands, if not millions of dollars, just looking at this. But what I do is I put boundaries around these prices so that I can understand them. These markets trace out patterns. And I just showed you this ascending broadening price pattern that I knew right here, we were going to return right there. I said in my emails back in December, I think, when it was 1950, I said we're going between 1650 and 1700. And we went to 1681. Excuse me. So you can see with all the news and all of the opinions and all the things about gold, and I'm sure you guys have heard thousands of them over the last year, with the pandemic, with the easing, with the quantitatives, with the devaluation of the dollar. You've heard everything. And I just looked at this pattern and said we're going to come here. JP Morgan said we're going to 3100 in that time frame. I said we're coming here. It's not me. It's just these markets trace out these patterns. And if you understand them, then you can set up your trades around them. Natalia says XAD, I think because the last new high closed on the low, that the trend could go down. So yes, the trend is down. Ken says, the problem is I'm annoyed how to get over looking at the news. I don't look at the news. I just have the financial channel on behind me. I barely listen to them. You got to stay in a cocoon. This is all I look at, price and time. This is all the information I need. Lynn says, I went long because another person I said followed, I said long. So, this is where, this is a loner business. And this is why I didn't want to do the pattern trader, because I didn't want to have the emotions and all of the things, the pressure. This is a solitary sport where you got to go into your cave and you got to say, when everybody's saying, buy right here, the whole world was saying you got to buy gold here. And I was shorting it. Now, I'm not trying to be a hero. I'm not trying to be a rebel. I'm not trying to be a counter-revolutionary here. I was just looking at what I thought was the pattern and, what was going to happen here. And I thought it would go here. And where it went from here, I didn't know if it was going to go make a new high or go make a new low. But, I was going to visit at that time. So, now we're at kind of in between. We're in between the high and low. And, where she goes, nobody knows. But in the meantime, I just took out $60, and a couple $100,000, on just a stealth move out of that inside bar price pattern. John says, so a lot of people have been asking about crude. Once again, I'm going to leave 5 minutes before the hour, so I'm just giving a heads up. And then Dwight will play you a video on how you can, sign up for our programs If so, let me go to futures. I don't know why it still has the June contract here. So oil has been, following the path of least resistance is higher. I've not been trading oil, in a while, but the path of least resistance is higher, and the next resistance comes in around $75. So you can see that, oil traced out this funky double bottom. And even though the, one bottom is, way higher than the other, when you look at it, this thing, it's still a bottom, a W bottom. So the market traces out these shapes all the time. And then once you understand it's bottomed, then it can only do what? It can only go higher. Now, where does it go from here? Then, you bring in, where certain resistance at 75. So we're pretty close to very historical levels of distribution. So imagine, you may have some turbulence here, and then you see how it behaves at this resistance. If it just kind of, hangs out here, that's very healthy then, to put on a push for the next move. On the other hand, if we get above here and you start, seeing something like this, then you can say, well, maybe it's going the other way. So, the market kind of gives you a heads up as to what it wants to do by, forming certain shapes, and then price action where you can create these. Teddy says you have a simple way to see it and do it. So yeah, I believe in, keeping this very simple. I always feel like I should be able to explain this to a 6-year-old, because that's about the extent of my mentality. So Dwight says, using your rounded top pattern on the Dow Jones chart today, I made 125% in DIA puts in 4 hours. Thank you, Mark. You're the best. Oh, fantastic. I wish I had done that. I wanted to do that 2 days ago. I wanted to buy DIA puts, and I didn't do it. So I'm glad somebody made money out there. So John says, people are saying crude is going to $100. Forget what people are saying. Who are these people? The only thing you should be following is price action. So right now, the path of least resistance is higher. I mean, crude is going higher. And so, you just have to know that these reversals right here, just like the reversals at 1950 in gold, will create some headwinds. So you may kind of, you may even come through here, but then, these usually are areas that are, very meaningful tests. And just like any test, it's, how we, kind of meet this test. Do we just kind of not sell off? We just hang out here? Then that would put a basis for a push for a bigger move. On the other hand, if we get a huge key reversal here, I can't really see it. So there's always some look before a market turns from one direction to another. And there's no look here. The crude does not look like it's going to turn lower meaningfully. So Adrian says, I'm a pattern trader member. I took your gold trade and just took profit. Yes, sign me up to the elite. How can I get Elon Mark's email? So Dwight is going to play a program for you tonight, guys, and that will be, kind of the first, entry level. And then if you want, other things we do, then, you can just let us know. So yeah, I mean, gold is, I was making, I think 95,000 on my gold position when we started, and now I'm making 135,000.
Okay, Mark. So we have a comment over on YouTube. Kenny is saying experts were saying to buy silver. Looking at silver, I could see that it was going to drop, so I put a sell on 27 26.324 and now at 26.966.
Okay, so I'll take that in a minute. So first off, you guys should not be listening to anybody, including me. What I try to do is kind of give you the information to start seeing these trades, and then you should create your risk reward and not listen to blogs or TV or what have you. Who's these people? So, here's my gold trade. It was like 95,000 when, when I came on, and now it's at 135. So, so let me look at silver. So really, you guys are saying I'm listening to people. Somebody told me. Who's that somebody? I mean, to me, I only look at price. The market is, I don't listen to Jerome Powell. He's the chairman of the Federal Reserve. It doesn't matter what he says or doesn't say. It's the markets, are a discounting force. The markets tell you. So, I've had, some conundrums about silver. I made a huge amount right here where I saw this inverted head and shoulders, and it coincides. So the neckline of this head and shoulders also coincided with a 7-year downtrend line. They both intersected at the same point right there. So I bought this. I mean, I loaded up there and got out early. I got out about there. I left this much on the table, but I made 7 figures between there and there last July. So that was kind of your governing pattern. Now you've kind of, have this intermediate double bottom, and it looks like you've got this kind of ascending wedge that it could keep, kind of bouncing between. I just don't like this guy right here. So this is what's, had a problem for me. This key reversal here, you made a new high, close on the low, buried. So that guy's buried right in between all of this price action. So that to me has always been limiting the upside. And so silver, I said in my email on Sunday, silver is a little bit more of a mystery than gold. Gold was much clearer. I said, gold, the recent upward momentum seems to have stalled. I said, silver is consolidating at major resistance levels. While I feel the path of least resistance is higher, I anticipate there could be a great deal of volatility at the current levels. So while, silver looks enticing from the long side, I'm electing to stay on the sidelines because to me, silver is still kind of, going higher in a, in this, cadence. It could still do that, but it's just a mess in here. So, gold just seemed clearer to me. And again, silver is not gold and gold's not silver. I had a very specific risk reward, outlook on gold. I could see that clearly where, silver is much more, of a morass or confusing at this point. Ken says, thanks, Mark. I just went long on pound New Zealand, pound US dollar. Well, I don't know about pound US and no stops. Yeah, I don't want you guys, to get taken to the woodshed. I don't want you guys to get into a habit of not putting stops or what have you. So Mustafa said, I was on that silver trade. I was a weekly Sunday member at the time. I made a super profit, but then I went short and lost it all. I wasn't listening, understanding enough at the time. Now I'm a different person. I don't choke a profit. So thanks again, Mustafa. Ken says, thanks, Mark. I've just went long on pound New Zealand and pound US, no stops or profit taking. I believed in you. Yeah, so I don't want to lead you guys into the woodshed here. Whatever I say, you just got to keep, an eye on prices. And if price starts telling you a different story, Kent, then you got to listen to price. What I say, has no bearing. I have a strong feeling, but, if one day, pound New Zealand makes a huge, move up and then goes down, then, then it'll tell you to get out. But for right now, I don't see any obstacles in the path of pound New Zealand. So I'm going to get off in about five minutes, guys. I'll take, one more question and then I've got to get off here.
All right, so this is from the Q&A. Michael is asking if the Australian dollar and New Zealand are, correlated to other currencies, as in, do they move together?
Well, all currencies move in pairs, right? All currencies, so you can't just say New Zealand dollars. New Zealand dollar against what? The pound, against the euro.
Australian and New Zealand.
Oh, the Australian, New Zealand. I don't really follow that pair because it's just, you can see it's just a very range bound pair. They're very correlated to each other. So they just kind of stay in the same area. So you can see this is years and years of it just going in the same area. So I do not look at that chart at all. Tanaj says, so if volume combined, does this not give you better correlation? So I don't think, volume in FX, is a very good indicator. Anyhow, I don't use it. Whatever's you're looking at, I just see a picture. And so this is a great idea. I mean, I go through like 20 FX pairs, and if I see something like this, I just move on. If I don't, I just motor through my charts and I kind of look at something and I say, is this doing something? Is this, a good risk reward? So you can see that we've got kind of a reversal going on here on the weekly at at a major area. And I'm saying, well, this may be an area. And so I just kind of go through, look for the trend, look for a pattern, look for, different things that I can, see will, correlate to some kind of risk reward setup that I can look at. So if something's just, going sideways, like euro pound is a very highly correlated, I got that wrong. So I don't really trade these unless there's a real area where I can find some breakout. So you can see that euro pound is starting to coil here. You've got this is a weekly bar. So you've had 1, 2, 3, 4, 5, 6 weeks kind of coiling. So now this is going to spring out of here. And by virtue of the prior history, it looks like it's going to spring lower. So while I never really trade this is something that you could set up a good risk reward. It looks like you've kind of got this and so you've got this coil in here. And so again, I don't really trade pairs that just go like this unless there are certain junctures where it gives you a double bottom here and you can, make a nice trade. But for the most part, I don't really look at pairs like this. But now that I'm looking at this, I would just sneak a sell stop under all these lows, and the market may put you into a good trade. All right, guys, I'm gonna leave it there. I'm gonna let Dwight finish it off and show you a video. If you'd like to sign up for our program, the video will inform you of how to do that. So John says, thanks as always for your time and teachings. You give me so much confidence. So thank you, guys. I gotta just cut out today for a family matter here. Natalia, please call me Mark. When you call me Mr. Shawson, I look around, try and find my dad. So thanks, everybody. All right, Dwight.
All right. So I'm just bringing up that video.
Okay. All right. Thank you.
In this video, I showed live statements of how I made $177,800 $858.13 in just 48 hours. After releasing this video, example, a trader's life said, wow, I can't even imagine having that degree of success. It turns out that not many traders, surprise, the majority of traders aren't even making $5,000 on any given trade. So I've decided to run an experiment with a select group of traders. I wrote an email to my list and asked them one question. I didn't think many would be interested in this, but to my absolute shock and surprise, 1,126 people wanted in on this experiment. I got over 1,000 responses to this question, and some of them wrote really long answers. The comments you see on the screen right now is just a small handful of them. You're probably wondering what got those traders so excited. Let me continue reading the email I sent them. Why on earth are so few traders not even making the bare minimum of $5,000 per profitable trade? And last night, the answer hit me like a ton of bricks. People are following me online, watching videos, taking trades, but there's still something missing. So I came up with a plan, an experiment. To make the bare minimum of $5,000 per profitable trade, you need about $200,000 in your trading account. So I've decided that I want to take on between 10 and 20 traders and give them a customized plan to reach a $200,000 trading account. And then I would execute that plan alongside with them. However, this idea is still in its infancy. I need to know whether or not people are even interested in something like this. My gut feeling is that most traders are just in it for the rush, the gambling, the action, the 5-minute charts. They're not in it for the long haul, a multi-year plan that'll actually get them to a minimum of a $200,000 trading account. So if you are a trader who would like to know exactly what it takes to grow your trading account to $200,000 at a bare minimum, and you want to find out what happened next in this experiment, then pay close attention to this short video. In fact, by watching this video all the way to the end, you'll end up discovering how to get your own very customized plan to achieve a $200,000 trading account. A plan that doesn't require you to jump from one guru to the next using weak trading systems. A plan that uses a scientifically tested trading method to reach 200,000, and one that makes it mathematically impossible to lose your entire trading account. The shocking truth is that you've been lied to when it comes to making big money in the markets, and those lies have all but destroyed your chances to reach the success you desire. You may have heard, or perhaps even believed at one point, that you can make a huge amount of money in the Forex and stock markets. And to do that, you were told you simply need to find out the secrets of some trading guru or system. And these secret methods are hidden, just out of reach. And when you finally find the right person that will reveal their secret trading method, you'll be financially free. Unfortunately, that's nowhere near the truth. Just know this, countless other smart men and women have fallen victim to this rather clever lie. Penny stock secrets, Bitcoin secrets, a trading robot running some secret Forex algorithm, Wall Street secrets. Trust the group of traders. So they bring in a data scientist with a PhD in the subject to verify the particular strategy. And this is what happens next. One, they need to strictly define the parameters of the trading system. Two, they then test the strategy using a data set. Three, they write a paper about it and explain the limitations. Four, this paper is ultimately peer reviewed by other data scientists to see if the results are statistically valid and true. Number five, even more data scientists read about the strategy in a journal and try and replicate their results in all sorts of different markets. So there are no real secrets. Everything is out in the open. For example, Gutierrez and Kelly are two data scientists who confirmed you need to trade on the daily, weekly, and monthly timeframes. Predicting the general direction of the market with scientifically tested trading patterns is well established by countless other data scientists, including Friesen et al., Lowe et al., and Foltis and Langer, where you enter, exit, and everything else about a trade is already out in the open. So why on earth do you think I spend so much time revealing my secrets for free on YouTube and Zoom? Because they aren't secrets and I have nothing to hide. It's the same as every other job in the world if you think about it. Take a plumber, for example. The information you need to become a person who fixes pipes is well established. It's not some secret hidden by a few select plumbers who are ready to spill the beans. However, if you give me a book or an online course and send me in to fix somebody else's pipes, I assure you I will fall flat on my face, no matter how many plumbing secrets you give me, and that's the big truth. To become an incredible trader who makes piles of cash, you need to follow a proven formula, and then you need to stick to it. And if you do, you may be able to look at your broker account and see things like this.
Right now, making about 158 grand on the FX side. This is $1.5 million dollar position. I'm making over $157,000 currently. You can see that I've got two positions. I'm making over about $500,000 in gold and long pound New Zealand, short the NASDAQ.
It is possible, but it is not sexy. It takes time, it takes commitment, and it takes consistency. Just like it takes time, commitment, and consistency to become a decent plumber, electrician, or accountant. Deep down, I think you already knew this truth. Deep down, you always knew that it was possible to make a living from trading, and you always knew that it would take a serious commitment to get it right. That's what happened when I sent this email. My gut feeling is most traders are just in it for the gambling, the action, and the 5-minute charts. Not for the long haul, a multi-year plan that'll actually get them to a minimum account size of $200,000. I realized that I was wrong, and it turns out 1,126 traders are exactly like you. Tired of gambling, tired of jumping from system to system, tired of not knowing what's around the corner, tired of falling for somebody else's secrets. So my experiment involved two things. One, I would personally oversee a customized multi-year plan for each trader that shows them how to get to a $200,000 trading account. A plan that takes into consideration their income, account balance, and other circumstances. They would get an exact timeline of when they would hit $200,000. And they would know precisely what to do and when to do it, planned out with dates, amounts, and specific actions they need to take. Two, I would personally spend 3 days with them in an exclusive trading group. This was not a webinar. This was a live Zoom meeting. They got to speak to me and trade with me face to face. It was an intimate group trading marathon where we went into the markets together and looked at trades. They got to meet other traders who are in the exact same boat as them. No more sitting in the comments section waiting for me to answer questions or critique trades. They weren't one among 500 traders like usual. I chose 50 traders to personally coach. It was like we were all in the same room, able to talk and interact like human beings. And the feedback from this experiment was a lot better than I expected. Now, if you'd like to get your hands on a customized plan to get to $200,000 and a 3-day coaching marathon with me, just like the traders inside my initial experiment, then listen carefully. 1, send an email to Mark Shawson, RSVP, @gmail.com with the subject line 200K. 2, one of our team members will send you the rest of the details on how to sign up. However, before you jump off the video and decide to join us, I have to warn you, there are a subset of people who should not join. 1, someone who wants a quick fix. This is a multi-year plan. I don't do quick fixes. 2, someone who doesn't want to invest time and money into the program. I only want people who are going to take this very seriously. If you have a problem in investing and taking risk, then that's fine, but this isn't for you. 3, someone who thinks in terms of months, not years. Again, trading takes time. If you tend to give up after 6 months, then I'm not the guy for you. It takes a lot of manpower and resources to deliver this program to you. The $200,000 plan will be customized to the specific circumstances of each person who joins, factoring in your current account size, income, etc. You will also get 3 intimate group coaching sessions with me where we go deep into the markets and enter trades together. This is a small, interactive meeting with me and a handful of other students. It's not like my other huge webinars. Therefore, there is a fee to join. This is not a free program. However, if you get everything mentioned in this program and you don't think it was worth it, I'll happily refund you the fee. So hop on board and get your customized plan to a $200,000 trading account. Pick my brains, take my trades while spending 3 days with me and a group of other traders. And after that, if you didn't like it, you'll get a cheery refund. That's as fair as I can make it. If that sounds good to you, then send an email to markshausen, rsvp@gmail.com with the subject line 200K. And please don't forget, I can only take on a small handful of traders every time I do one of these programs. If you miss out, you'll have to wait. Hopefully, I'll see you on the other side.
All right, everyone. So that's it for today. We'll see you again tomorrow.